Hello, one and all. How are you guys doing? So, I'm making the first 100 videos about the top 100 coins. So today we start with Bitcoin, which is the big daddy of coins. So what is Bitcoin, right? Bitcoin is the first distributed peer-to-peer payment settlement network, which is censorship resistant, which has a scarce supply of 21 million, and it is mined. The last coin will be mined in the year 2140 after we we might be dead right at that time. We might be in the graves. And it's the world's first digital currency without a central bank or an administrator. And Bitcoin network is in existence, but by the interplay between the full nodes, which are users and the miners and the developers, and it is hardened or secured by game theory or cryptography. You ask me that what is game theory? Game theory makes sure that rational actors act in a certain way, or for example, the miners who are mining the Bitcoin act in a certain way to get their rewards. So let's get into the history of Bitcoin. History of Bitcoin starts in the year 2008. Amid the global financial crisis, Bitcoin white paper was published by Satoshi Nakamoto, who is the creator of Bitcoin, who might be a person, not a group. He's really anonymous. However, in January 2009, 3rd January I guess, the Bitcoin network came into existence by Satoshi Nakamoto mining the first block, or the Genesis block. The first commercial transaction happened in 2010, which was 10,000 bitcoins for 2 Papa John pizzas. It was done by Laszlo Hanyecz. And moreover, coming towards the August, I guess, in 2010, the Bitcoin network was popular right at that time. A major vulnerability was spotted, which gave the users to create infinite amount of bitcoins out of thin air. So this major vulnerability was spotted and erased all the transactions which exploited the network. In December 2010, Satoshi Nakamoto was disappeared. Before his disappearance, he had mined 1 million bitcoins, which is around 50 billion today, I guess, 50 billion USD. And coming towards 2013 or 2014, MTGOX, which was the first or the earliest exchange for bitcoins and other cryptocurrencies, was hacked. Amounting 850,000 bitcoins was hacked from the network. It was around 450 million USD at that time, which marked the 2013 bull run. And coming towards 2017, the hard fork of Bitcoin, which is Bitcoin Cash, happened, and it marked the 2017 bull run. However, after the crazy bull run, which was parabolic in 2017, which mounted Bitcoin to $20,000 level, has come down to 3,000, I guess. Again, after the Black Swan event, which was COVID in 2020, the Bitcoin price went from 10,000, I guess, to 20,000. Until that, from the end of bull run to the start of the 2020, it was $20,000. it took time for that. On in September, which was yesterday, I guess the event happened yesterday. The first country to legalize or make it a legal tender in that country was El Salvador, giving the citizen, every citizen who have installed an app which was given by the government will get $30 each. So let's get into the supply metrics or the metrics of Bitcoin. Bitcoin has a fixed supply of 21 million and a circulating supply of 18 million and around 18 million and 800,000 change. Bitcoin halvings are scheduled once every 210,000 blocks. That is roughly 4 years. On the day of halving, the number of Bitcoin rewards given to a miner validating or mining or processing a transaction is slashed by 50%. Slashed by 50%. Like you can look at this around 2016 or 2020. You could have gotten 12.5 Bitcoins per every block created. After the recent halving of 2021, you're getting 6.25 Bitcoins per as a reward for validating or mining or processing a transaction. And the most important, I guess I have to show this for you guys, the stock to flow model, which tells you about the price of Bitcoin after every halving, or the demand for Bitcoin after every halving. And Bitcoin is divisible I guess 10 zeros. I guess sorry, I'm not 10 zeros, but around 8 zeros. Bitcoin can be divisible until 100 million Satoshi. We're getting into value metrics and on-chain and governance and exchange metrics. So Bitcoin is trading around 45,500 and it has circulating or the market cap around 850 billion, and it has an all-time high of around the 64,000 level, 64,000 USD. And coming towards the on-chain activity, active addresses around 850,000, and takes 10 minutes to mine a block. That's a long time, but it's quite easy to do that. And the new address is around 375,000 users. And coming to the exchange metrics, I guess total supply of exchanges is around 84 billion, and the long-term holders are holding more coins, like 84% of the total supply, I guess, than actually trading Bitcoin. You can understand why are they actually doing that. They see the value of Bitcoin. And diversify, it is listed on all exchanges. It's the king, it's the big daddy of coin. And coming towards the last thing of the analysis, which is the governance and mining structure. Bitcoin is secured by proof of work consensus, which is nothing but the miners who are validating your transaction or processing your transaction gets a block reward for validating those transactions. And it's nothing but a computational code. They actually compete with each other. Each miner competes with each other to get the block reward. Who completes first thing. And if the computational code is of the same length or the same thing, again they see which code or computation code is longer in that. Longer means if that's a 12-letter code, it should be, and another one is 8-letter computation core, the 12 letter wins it. And this 12 letter is actually a chain in the block, and the other miners which are mining the other transaction has to take it as the previous block. My opinions on Bitcoin or the BTC network, because opinions last actually. Bitcoin is really scarce, like 21 million coins. It is considered as a digital asset, I guess, today, more like a digital gold. And it shouldn't be compared with gold, but because there's more gold and silver in the universe than on sand, then there's sand on beaches. A famous scientist used to tell that. However, that's a different topic. And moreover, some countries are adopting Bitcoin as a payment network or a legal tender. For example, there's El Salvador and Panama. Panama is actually thinking about that. But it starts with one country, right? Let's start with one country like that. However, moreover, the other cryptos are not actually currencies, because there's actually platforms where other digital products to be used by consumers. Like you take Ethereum. Ethereum is just programmable money with lots of dApps, applications on that. That there's NFTs, there's DeFi, decentralized finance, there's gaming, there's more interesting sectors opening in that. So, moreover, that's a different topic, but they can't be characterized as a currency or something. And I actually think the US dollar is actually devaluing itself right now, because there's more money in circulation. Like there was a report by Fidelity that around the year 2038, 1 billion USD is equivalent to 1 Bitcoin. 1 billion. That's a huge amount of money. That doesn't mean the Bitcoin value has gone up. That means the dollar has devalued. Like you can have dollars in your hand, but it's nothing. In the span of 10 years or 20 years, it can be sitting in a bank or something. You could hold up or anything. But if you have assets, they'll definitely increase, like real estate or anything. Real estate, stocks, everything. It's not the asset value has gone up, but the dollar keeps devaluing itself or inflating itself, more of a supply. However, my final remarks are Bitcoin is actually an experiment which has been gone right. There's many of them which has failed, but it's actually very good, efficient in the sense that it is like it's the greatest invention of the 21st century. That's my closing or the conclusion for Bitcoin network. Thanks for watching us, and do watch our YouTube channel, which is All Your Crypto.